Good morning, friends. This is Kaustubh from Fundamental Desk. Today we are discussing the quarter 3 earnings review on the FMCG sector. Quarter 3 was kind of disappointing for FMCG companies in terms of sales volume, as we have seen that most of the companies under our coverage, they have felt the pressure of sustained inflation, sustained high inflation, and uncertainties at the macro level. So because of that, some of the companies under our coverage, for example, HUL, there is a moderation of 200 pips in volume growth to 5%. Marico, in some of its key categories, domestic categories, it has witnessed moderation in volumes. For example, Parachute's volume growth decline. Also, the Saffola's volume growth came into single digit. Even GCPL in soap, domestic soap segments, the volume growth for this particular quarter was 2%. Vis-a-vis, it was 6% in quarter 2 FY13. So most of the companies under the FMCG sector, also for example Colgate India, though company is not under coverage, but we have been tracking in terms of the performance, and we have seen that even in toothpaste category the volumes have moderated from 11% to 7%. So for past 2 quarters we have been seeing that discretionary categories were under pressure, but in quarter 3 we are seeing that even the daily consumption items or daily consumption good has been affected because of the inflationary pressures and the macro uncertainties. So I think the volume the top line growth for this particular quarter was largely mix of volume and value. So because of the price increases undertaken in the previous quarters, the company were able to achieve double-digit revenue growth. Positive is that the gross margins have improved, as we have been speaking that the commodity prices have been falling, and now that downward trend has been continued, and we were expecting that considering the base of second half of the second half of the FY 2012, we believe that the margins would improve significantly in quarter 3 and quarter 4. So in this quarter we have seen a significant improvement in the gross margins. Companies like Marico, GCPL, GSK Consumers, Zydus Wellness, Bajaj Corp have seen significant improvement in their gross margins on year-on-year basis. However, these large savings in the gross margins were utilized, for higher advertisement and promotional spend. Especially in quarter 3, we have seen many, new product launches by various companies. Even most of them have got launched even variants in their product. So, they have supported these new launches with higher ad spends and media activities. Also, we have been seeing that past few quarters, FMCG companies have been supporting their existing product portfolio with adequate branding, because that is required if you want to improve your sales volume or if you want to maintain your market share in the domestic market. So FMCG companies have been continued their higher ad spends. Even in this quarter, we have seen that most of the companies' ad spends were higher on year-on-year basis, which have affected the operating margins. So for most of the companies, we have seen slight decline in the operating margins, or they have remained flat. Overall, on Sharekhan's universe performance point of view, the overall growth was 16% in the revenues. The operating profit grew by 14%, and the adjusted VAT grew by 18%. But if we consider the outperformer, clearly ITC, this is the third consecutive quarter where ITC has achieved about 20% growth in revenues and bottom line. The highlight of the quarter for ITC was a sequential improvement in the cigarette sales volume. The cigarette sales volume growth for the quarter stood at 1%, which was flat in the first half FY13, and even the non-cigarette FMCG business have performed extremely well. 22% growth in revenues, and losses have come down significantly. So ITC is clearly the winner for in the large cap FMCG space. Some of the niche players like Bajaj Corp and Zydus Wellness have performed well during the quarter. Bajaj Corp close to more than 30% growth in the top line. Gross margins have improved because of the decline in the commodity prices also because of the higher sales realization, and that has clearly shown a strong growth in the bottom line for Bajaj Corp. Zydus Wellness, it has shown the revival in the performance because some of its categories were impacted by the competition and inflationary environment. For example, sugar-free, the category growth rate itself has improved from higher single digit to high teens. So because of that, since Zydus Wellness is the market leader with 90% share in that particular segment, its growth in that particular segment has improved significantly. Also, for example, even Ever Youth, where company was facing pressure from top brands like top players like HUL and Johnson & Johnson. Even there, since company has been continuously promoting their brands and enhancing their distribution reach, they have seen improvement in the growth rates. So niche players have done well during the quarter. Some of the disappointers are like GCPL, where though there was a growth in the top line and improvement in the gross margins, at the operating level the margins declined, and during the quarter the margins stood in the range of 15 to 16% as against our expectation of 18% for the quarter, and because of that even the bottom line growth was subdued for GCPL. GSK Consumers, we have seen decline in the operating margins because of the higher other expenditures, while the top line growth stood at double digit, and even there was also improvement in the gross margins. So there were few disappointments during the quarter, but clearly the pressure on the sales volume is visible, and going ahead we believe that government has to take some drastic steps to reduce the inflation. They have come up with a budget where the sentiments of the common man or consumers would improve, and that will help the FMCG companies to see better demand in the coming quarters. Also, we will see that companies with raw material prices coming down, now companies would be enhancing their focus on improving the volume growth. So we might see some of the actions from companies' point of view in terms of price or in terms of promotional activities, which will help them to improve their volume growth profile in the coming quarters. So I think next 2 to 3 quarters has to be keenly monitored, but we believe that the long-term growth story of the FMCG sector is intact for the domestic market, and I think this particular phenomena is the short-term phenomena. In terms of topics, we maintain companies having a strong balance sheet and good earning visibility as our topic. Hence, ITC, Bajaj Corp and GCPL remains our topic in the sector. Thank you.